Good morning, everybody. Welcome to today's Morning Coffee with Mike. I did not know that we would be talking about this topic today, go woke or go broke, but I saw a couple of videos yesterday and today. One was from somebody that I follow closely, Patrick Bet Davy, the PBD podcast. He was talking about the Mulvaney and the recent Bud Light campaign. I also was looking at something today from JP Shears about the same topic, and uh, this is a this is obviously a stock show. You guys that are hopping on, welcome everybody. You guys know that we talk stocks, so they were talking about how uh, the share price was impacted. You were talking about how sales of Bud Light and this ad campaign came out. If you guys haven't heard, with Dylan Mulvaney on April 1st, right? Can't make this stuff up. Where he was talking about, or however Dylan identifies, talking about the uh, about Budweiser, about Bud Light, and that hit. Dylan's face was on the can of Bud Light. A lot of people have come out against it. Um, Kid Rock shot up the cans, and uh, well, more importantly, though, what made it be the topic of this conversation here is that uh, PBD, Patrick Bet David, was mentioning that sales of Bud Light dropped 30% in the week right after the campaign, and it's still down right now. So I wanted to take a look at the share price, because the other impact too they were saying was that, well, the impact of the campaign is that the market cap is down several billion since they launched that campaign. So is that something that we need to be paying attention to as far as the stock price goes, right? Again, this is a stock show. Let's take a look at the stock. It's going to be challenging to share this overall on Instagram, but I'll move this camera over here, and hopefully you guys will be able to see what I'm looking at on this side, and I'll share the screen over here on YouTube. Let me know if you're able to see this okay over here. It actually looks decent on my end. So let's get this part going here. Great. So few things that I'm seeing about the stock price, right? So this is a weekly chart, and the stock uh actually, well, let's go over to a daily time frame. So this is March 1st or March 31st. Here's April 3rd, right? So the first day when the campaign launched, and the share price was down quarter of a percent, no big deal. Since then, about, what was that, about $66 down to about 64. Is this the direct result of that campaign? Does it even matter? Well, if we were to zoom out to a weekly time frame, right? Could you pinpoint when this ad ran? No, right? If we're zooming out all the way over here, now let's take off the pattern rec. It just looks like Bud has been trading in a range really since COVID, right? Let's zoom out to a monthly. Anheuser-Busch has been in a downtrend now, going back to 2016. Very interesting. Here's something else to look at. I was curious, since we're talking about the stock here, right? We're talking about the stock, and we're talking about the impact of Bud Light, and how the share price is dropping because of some ad about Bud Light. I was curious to see, well, how many brands does Anheuser-Busch actually have? So according to this up here, there are 500 brands in Budweiser. I pulled up this website over here. to take a look at some of the other brands that it has and scroll down over here, some of the beers, Bud Light. Okay, so the Michelob Ultra, Stella, Busch, Landshark. Actually, like Landshark and Shock Tapa and Hoegaarden too. I didn't know that they were a part of Anheuser Busch. Then come down here to Blue Point, um, Goose Island. I actually like this. So there's a lot of different beers in here that are all part of the Budweiser brand, and that's just the more popular ones. There's a lot more than just those, that right, like they've got 500 altogether. So how much of an impact is Bud Light sales being down really impacting the share price? Something else that JP Sears had mentioned was that they they were getting money from Vanguard and from BlackRock in support of this campaign, so that could actually help the price move higher too. So one point that I think that we need to think about when it comes to share price and it comes to seeing something that we either like or we dislike in the media, something that we agree with, is, well, it may or may not be affecting the share price at all, right? There's uh, on average, right? Let's switch back over to the chart. Come back over to the chart, and I want to highlight this right here, right? Hopefully you can see where my mouse is. That's the average daily volume. So there's 1.7 million shares of this thing traded every single day. So there's a lot of decisions that are going on in between each one of these transactions. Some people might be buying it for one reason, somebody else might be selling it for another reason. Um, and there's so much that goes into the actual price movement of a stock at any one period of time that it's very hard to say that this singular event is something that will be driving the stock. Now, let's talk a little bit about how I go about analyzing stocks, and if this is one that would even be worth buying, right? So there's a few things that I like to look at when I'm going to buy a stock. And let me move my water bottle over here and shift Instagram over. You guys over on YouTube and everywhere can see this already. Good morning, everybody. I see a few people over there in the audience. If you have questions, type them right into the chat. We'll get to questions in a minute. But there's a few things that I like to look at when I'm screening for stocks. And by the way, this tool that I'm sharing with you, this is called MarketSmith. It's one of the tools that I like to use, that I like to screen for stocks on. I have no affiliation with them. I've just been a user of their product for more than a decade. So first thing that I look at, especially for a stock that's been trading a long time, is this right here, the composite rating. This takes a number of factors, largely earnings, sales, ROE, EPS growth rate, projections of so many different things, and gives a composite score. I only trade stocks that have been trading for a long period of time, like a Budweiser, that have a score over 90. And the reason why is because IBD's research, Investors Business Daily, and really William O'Neill's research, the guy that wrote How to Make Money in Stocks, found that most stocks that have gone on to make tremendous moves have had composite scores above a 90, that have extraordinary earnings and sales and accelerating earnings and sales. Quarter over quarter, you want to see growth of 25% or more in both of these categories. If we take a look at this down here, right, put Instagram a little bit closer, the most recent quarters of sales have been in the single digits, right? Going back to last year, 8% sales, 9%, 6%, 3%. That's not the kind of growth that I would be looking for. Earnings. In September, earnings were up 62% versus the same quarter the prior year. Then in December, 9%. So earnings are kind of all over the place. If you take a look at this over here, the EPS growth rate, -7%, ROE only 9%. So that these numbers are pretty weak. This stock, if we're taking a look at the price action, this is not a market leader. This is a stock that's basically gone nowhere for years now. And again, if we pop out to a monthly time frame, it's been in decline, really going back since 2015. So for well, what is that? That's 8 years that the stock has been in decline. Not something that I would be interested in at all. If you're looking for a stock that can move, if you're looking for growth, if you're looking for momentum, this isn't really going to get you either of those. But but let's say that your style is one where you want to sell options, right? I haven't looked at the options market for Bud, but with 1.7 million shares traded daily, I would imagine that the options market might be decent. It might be worth taking a look into, seeing if there's liquidity in the option market. And if you want to be an option seller, right? If you want to bet that, you know what, looking at this price action over here, Bud has not topped $70 going back to January of 22. So if you wanted to sell options, then that might be a good thing to do, right? If you wanted to sell calls above 70, perhaps that's part of what happened with that being released on April 1st. Who knows? But so many things play into the factor of a stock, and one ad campaign is not going to make or break a stock at all. I'm just putting the camera back on me now over here on Instagram and switching it back over here on YouTube. So one ad campaign is not going to make or break a stock. And there's better reasons that we can have to buy stocks too, and come up with trade plans that actually work. So pointing towards one ad campaign impacting the market cap of a stock, I think that it's good for headlines, but I don't think that in reality it means very much at all, for all the reasons that we already said in this show. So with that, let's go take some questions. You guys over on Instagram and Twitter and YouTube and everywhere that you're watching this, go type your questions into the chat now. Let's go through some of this here. Questions on this topic of stock. Let me know if you're trading Bud, or if you felt a certain way when that ad campaign came out and had different ideas of what you would do with the stock, if you were a holder, if you weren't. Let's see. Just going to see if there's questions coming in on Twitter too. The way that Twitter works is a little bit weird when it comes to the Q&A. You actually have to have the app open. Question that came in, unrelated to this topic, but first question so far is, what broker is best to work with, especially people in Africa? This question actually came in yesterday, and I answered this question. So hopefully you are sticking around to get this answer. BS underscore JWT. So when it comes to brokers, especially international brokers, there's only one that I'm familiar with that I've actually used that is also an international broker, and it's Interactive Brokers. I like them. A lot of people in our group use them. We don't have a member that is in Africa right now, so I can't speak directly to someone that I know personally that's used Interactive Brokers in Africa or any parts of Africa. But if I were to look at one that's international, Interactive Brokers would be the first one. Reason why has to do with order execution. order execution is the most important thing when it comes to trading. Well, we want our orders to be executed at the price and as quickly as we can, get orders filled quickly, get the best prices that we can on the orders that we place. Uh, some brokers have a lot of slippage. You see price at one point, you click the button, and then you get price at a completely different point. That slippage can add up to a lot over time. So Interactive Brokers has fantastic order execution. Something else that it has is very low prices. I don't know how much they are in other places, but I believe I'm paying $2 per transaction. There's a lot of other places that you could go that might offer free transactions. My favorite broker, I'm based in US, so US, Canada, I know that they've got them too, is Thinkorswim. They're free, great order execution and free transactions. Uh, let's see. Well, what else? Um, the user interface in Interactive Brokers kind of sucks. So I just use them to place orders, and then I'll leave and I'll do all the charting in I'll look at MarketSmith, I'll look at TradingView, all the work, like the real trading work. I don't use the brokers tools for that. I like to use other things that are better. Most brokers tools are, they're okay at best. We could do better. So I'd rather just get a broker and allow the broker to do the thing that it's best at. The reason why I'm going with them in the first place, it all has to do with how good they execute the orders. And then the next thing that I'm looking at is the transaction fees. So let's see what other questions came in. Scrolling back up through the chat. If you guys on Instagram, if you guys here have questions too, if you use the little question bubble, it'll help me see the questions easier. Question from Raul or request. Give some suggestions to control our emotion when we have in the position. So you're in a stock, and let's say that you were trading Bud, right? Just going to take a quick sip of coffee here. So let's say that you were trading Bud, and you saw that ad campaign well, with Dylan Mulvaney, and let's say that you personally didn't like it, and then later on, a day later, you saw that, oh my God, there's the sales of Bud Light are plummeting. It's down 30% over the past week. In-store sales, crap, what's going to happen to the stock? And then you see the stock actually starting to come down, right? Like how we were talking before. Let's switch back over to this here and look at the screen. So let's say that you're looking at the daily time frame. You see the share price. Just moving Instagram over to zoom in a little bit better. So let's say that you see this gap down over here on what day was that? That was the 10th. So that was Monday, right? So let's see that you see that, and you're getting freaked out, and you're saying, "Oh my God, this ad campaign is making Anheuser tumble." Um, Well, what are some ways that you could have emotional control when something like that is happening, right? So you're already emotionally triggered because you saw a beer that you're interested in, and you disagree philosophically with the ad campaign. Then you see the price drop, and so in your mind, you might be linking those two events together. Whereas in reality, maybe they're linked, maybe they're not, but the overall impact to the stock is not going to be driven by any one event. Like we were saying before, you zoom out to a weekly time frame and you're just looking at all the price action there. No one event is going to make or break any kind of a stock. And just bring this back over here. Right? None of that is going to impact the stock at all. So The one thing that will help you have better emotional control is, well, better understanding of markets, right? So one of the skills that we talk about in the trading mind wheel has to do with analysis and how you are analyzing the market and what types of things actually matter. Right? You might think that, oh, I did some research. I watched a YouTube video. I'm listening to Mike here on the morning coffee with Mike show. That's my research. No, no, you need to develop your skills, and the way that you go about developing your skills in analysis and market analysis, trade analysis, mindset, all these things. I outlined it in here, and it's market analysis, trade analysis, that's one thing that will help you in this specific scenario. Another thing that's even more important is awareness, right? Situational awareness, mental awareness, all these things. Your beliefs impact your actions. So, what beliefs do you have about the stocks? About in this case, right? Your beliefs about um, woke culture and how it might impact the world, how it might impact share prices, how it might directly impact your wallet if you're somebody that is selling uh, Budweiser as an affiliate. All these things might trigger you. So, how can you emotionally detach from those things? Step one is awareness of all these different beliefs that you have. How do you get those beliefs out? Well, you go and you write them. Right? You take some paper, you grab yourself a pen, and you start writing out all the different beliefs that you have. To focus, you start off with, well, what beliefs do I have about trading? Then you start to ask yourself, well, what beliefs do I have about money? What beliefs do I have about myself? You get as many of those beliefs out on paper as you can. And you're not just going to do this exercise once. You're going to do this exercise multiple times. And you're going to do this exercise. Maybe you do it once a day. Maybe you do it again in 3 months. Then another 3 months after that. Your beliefs will change and evolve over time. Then, once you have your beliefs out, you want to start questioning your beliefs. Is this belief serving me, and to what end is it serving me? Uh, Once you start questioning your beliefs, it'll do one of two things. It'll either remove that belief, right? If the belief isn't serving you, you'll be able to take the energy out of that belief, and it'll just naturally wither away and die or be put to the side. If the belief is serving you, you'll strengthen that belief. And that's really what we want, right? If a belief is serving us, we want to question it so it has the opportunity to get stronger. If the belief is not serving us, we want to question it so that way it gets weaker and we don't believe that thing anymore and we can start moving in the direction that's going to serve us better. Our beliefs are what trigger us emotionally. It's just like if you're like if I'm outside playing with my daughter in the front yard, and when she was younger, right now she's 7, she's going to be 8 in less than a month. But when she was younger, like say when she's 3 and she starts waddling off towards the street, uh, my emotional response is to go grab her, pull her back, so that way she doesn't get hit by a car. But at 3 years old, kids don't have the belief that the street is dangerous. So her perception at the time is very different from mine. Our beliefs are what trigger our emotions. So the better understanding that we have of our beliefs, the better we'll be able to have emotional control. So, Raul, hopefully that answers your question, and hopefully those exercises help you. There's a lot more exercises discussed inside the Trading Mind Wheel book. If you don't have it already, go grab a copy. And if you do have a copy, please drop some reviews on Amazon. That helps spread the word. Let's see. What other questions have come in? Let's scroll down here on Instagram. Yeah, you guys over there on YouTube and Facebook and everywhere, LinkedIn, type into the chat too. Let me know that you're alive and let me know what questions you guys have as I'm scrolling over here on Instagram, which is pretty active. What about the inflation numbers? Now, that's an interesting question, right? Inflation numbers, major impact to stocks, right? Well, it can be in the short term. In the very short term, it can have big impact, right? Like this one event. But what happens after this one event? Well, there's another event, right? Another. Infinite number of events happening right after inflation numbers. All everything that comes out after this point, we don't know what it is, but there are an infinite number of possibilities that happen after the inflation numbers. Perhaps there's uh, a world war. Perhaps um, the Fed comes out and reverses its positions. Maybe another country does something. There's so many different things that can happen after a singular event. We need to be open to all of it, right? It sounds overly complicated to think about all these different variables, and that's why so many people struggle with trading because they think that they need to be dialed into the news all the time to figure out, well, which way are things going to go? There's this impact, there's that impact. How is that? How's the inflation numbers going to impact the share price? Well, what should I do? The way that I found that's best to operate really stems from uh, understanding how price action itself moves and understanding some of the variables that impact the share price and understanding most importantly is that prices trend. So when price starts in a certain direction, like we saw with Budweiser earlier, it can stay in that direction for weeks, months, years. We looked at the price of Budweiser. It's down since 2015 and it's been in a downtrend since 2015. A lot of things have happened to Budweiser since 2015, I'm sure. Price can trend. So, with the understanding that price can trend, we want to hop on trends and ride trends. Great. If we can make money by simply understanding that trends exist and that we want to figure out how and when to hop on a trend, then we need to understand what causes trends and how we can hop on these trends. So, what causes trends? Well, you might say, well, inflation numbers cause trends, Mike, and maybe ad campaigns cause trends. How about those things? Well, historically, the things that impact trends the most are earnings and sales, annual earnings and sales, quarterly earnings and sales. We want to see these things increasing over time. If the company's earnings is increasing quarter over quarter over quarter, then it'd be hard for the stock to do anything other than increase, right? And if uh, the share price eventually tops out and starts rolling over, that's something that we want to be paying attention to. What we want to do is to have an understanding of if price has, or if the company, if the stock has certain characteristics of the stocks that have historically moved hundreds of percent, thousands of percent over a relatively short period of time, relatively short being a couple of years or maybe about 5 years, to move several hundred to several thousand%. We want to take a look at those stocks and see, well, what were the qualities of those stocks at the time that they started their moves? Time that they started their moves, they had extraordinary earnings and sales, and all the things that form the system that how I operate. Right, I talk about it in the book too. I have an acronym that I call EAGLE. It's actually the whole premise is that, well, it's building on top of what O'Neill started with CanSlim, and the part of the idea is to build in the asymmetrical, high probability, high reward to low risk setups into it. and that there's other things that impact price too. It's not just earnings and sales, but it's also the projections that we want to be aware of too. So if a stock doesn't have earnings or sales yet, but the projections are through the roof, then that's something that we would want to pay attention to. Um, so back to the original question, what about the inflation numbers? Singular event, anything can happen afterwards. Pay attention to price, look for the price consolidations, look for a breakout, and if price does break out and continue a trend, then we can ride that trend. We could ride that trend for a very long time. What we want to do is manage our risk, manage our downside. Let's see. Any other questions? Oh my goodness, we are ready. About 15 minutes over, a little bit longer than that. Take one more question here. Scrolling through Instagram. You guys over on YouTube and LinkedIn and Facebook are very quiet. That's okay. Love you guys too. Mukesh is talking about what is a good sample size to backtest a strategy. So the way that I like to backtest is to do factor modeling first and then manually backtest. That saves me a lot of time. Even though I'm doing two things, I find that it saves a lot of time because I'm starting out by looking at, well, what works, right? If I want to look at the stocks that have historically made hundreds to thousands of percent and find out, well, what were the characteristics of those stocks? Good morning, Mark. I see Mark watching, just typed in over on YouTube. So if I'm looking at stocks that have historically made hundreds of thousands of percent, and I want to go back and I can find out, well, what were the things that were common among those? Then that part is the factor modeling. Then if I want to go and see, well, how can I have traded those? And I'm looking for different patterns, and then I could go and back test how I would have traded those patterns. That makes the process a lot easier because I'm starting out with something that already works and I'm trying to figure out, well, how can I customize this? And that's how I would go about back testing. For that part, I would start with 100. Start with the goal to have 100 manual back tests in that way. And so what I would be doing is figuring out, well, how do I want to trade this? Coming up with the rules, and then testing those rules. If the results of the first 20 to 30 are absolutely horrendous, then the test stops there, right? Like I know that I don't want to keep on testing for 100 trades. But let's say I get to 2030 and the results are fantastic. Great, then that's going to tell me to keep on testing at least until I get to 100. And then I can see, well, out of 100 trades, this thing made X percent. It had such and such win rate. And then I could go and see, well, how does this play out in other market cycles? And do further verification, or I could begin to forward test it, meaning that I'm going to test it now in real time to see, well, how does this thing do right now? And I could do that either virtually, right, like just paper trading, or I can test it with real money. But if testing it with real money, do it with a small amount. Do it with an amount that's not going to hurt you if you were to lose it all. That's it for today. Hopefully this was a good show for everybody. Let me know. Drop comments. If you're watching this later on, drop comments. I read all the comments. And that's it for today. Oh, and by the way, too, if you are in the New York area and you are around on April 15th, I'm going to be doing a book signing at Barnes & Noble, Sunrise, Highway, Massapequa. Book signing, open Q&A, a little bit of a talk, and then we're having a party afterwards. Come out to it. Hope to see you there. And that's it for today. Take care. Much love. Peace out, everybody.